In this presentation, we're going to pay for inventory with a check by linking it to the purchase order. In other words, we requested inventory with a purchase order in the past. Now we've received the inventory and we want to pay for that inventory with the payment and will therefore populate our check with the information from the purchase order. Let's get into it with Intuit's QuickBooks Online. Here we are with our Get Great Guitars file. To consider what our objective will be, let's first take a look at our flowchart with the QuickBooks desktop version. So I'm in the desktop version just to look at the flowchart. So we have the vendors up top. We're in the vendor section. That's the flow that we're looking at. And we've entered a purchase order last time, or in the past, we have entered a purchase order. So the purchase order, remember, doesn't actually have a financial transaction, no effect on the financial statements. It's just a request because we haven't paid for it. We haven't got the inventory yet. Then we would get the inventory, in this case, our case, a guitar. And when we get the inventory, we would receive it, and typically it would have a bill within it. Now, at that point in time, you could receive it and record the bill at the same point, which would increase accounts payable and record the inventory on it. Or you could basically jump right to write in a check at that point in time and pay it off. And that's what we're going to do here. We're going to write the check. We're using more of cash transactions in month 1. And in month 2, we'll talk more about kind of accrual transactions where we'll use things like accounts payable more in the second month of operations. So that's what we're going to do. We're going to take that purchase order. We're going to help it. We're going to allow it to help us to populate the check that we're going to write in order to pay for the inventory that has now been received along with the bill. So back to QuickBooks Online, let's open up our report first. The report we're going to need is going to be the balance sheet report. So let's go to the reports down below and let's open up the balance sheet report. Let's open up the balance sheet. And then we're going to change the dates up top as is our custom. So we'll scroll back up top and change the dates from 01/01/20 to 12/31/20. Then I'm going to go ahead and run that report. And then we'll duplicate the tab up top. We're going to go to the tab up top, right click on it, duplicate the tab up top. Now the tab's on the left and there's a tab on the right. Then I'm going to make this one a little bit larger and close the hamburger and move it out of sight. Then I'm going to hold down Control and scroll up a little bit to 125. Now what's going to happen when we do this, obviously we're just basically writing a check to get the inventory. So that means the inventory is going to go up, inventory assets going up, another asset's going down, that being cash, that being the checking account. So it's going to go down. Now the thing that's different here, the thing that's kind of unusual or might be a little difficult is there an effect on the profit and loss on the income statement? None. Why? Because we didn't consume the inventory yet in order to help us to generate revenue. Instead, we're going to hold on to it and we're not going to consume it until we sell it, at which time we'll create a sales receipt or an invoice. So at this point in time, it's on the books as an asset, and therefore we don't expense it at the time of payment. So that's why inventory kind of has to be on an accrual basis if you're going to be tracking inventory, if you're not going to be selling it right after you purchase it, because of that difference in timing differences. So that's going to be what we have here. Let's then go back to the first tab. So we're going to go to the plus item, and we're actually going to go to an add expense. So we're going to say that it was an electronic payment, and we'll record the form then of add expense. So add expense. Then we have our options up top. We're going to be saying it's going to be inventory. So we're going to go to the inventory item. So we'll select the inventory option there. You'll also see that on the drop down up top where we have the inventory item up top. Then we're going to go to who did you pay? We're looking for Epiphone. So we're going to be saying Epiphone, one of our major vendors we could find in the drop down, or we can type in Epiphone and it should populate for us. So there it is. We're going to be picking up Epiphone. Now, as we do so, note the pop-up that happens on the right-hand side. That's what we want to happen because that's going to allow us to tie out, in this case, the purchase order to the expense. So we want to go ahead and add this item. And so we're going to go ahead and once I select add, it's going to populate this information down below for us. So I'm going to say add, please, and it'll populate that information down below. I'm going to say the date up top is going to be 01/25/20. And then how did you pay? We're going to say the checking account. So it's going to be coming out of the checking account. Then I'm going to scroll back down. Notice we're not in the category section. The category section is where we would basically be selecting an account. Instead, I can just simply, it's basically minimize the category section. We'd be down here in the itemized section or the item detail section. Why? Because we need to track not only the account that's going to be affected, which will be inventory, but also the sub accounts that'll be affected, the type of inventory that will be affected. Now, it populated for us already because we pulled it over from the purchase order. We sent the purchase order to Epiphone. The purchase order is now being linked, tying out the purchase order to our expense item. So we have the Epiphone here. We got one of them. The rate was $400. That's the cost that we have. Now, you'll recall down here, we had a customer that we assigned when we had the purchase order for Epiphone. Epiphone doesn't care about the customer, but we care because this is kind of a reminder to us. Now we're paying for this guitar, and we could say, hey, we had Eric, we need to turn around and make a sales receipt or a invoice related to it and sell it to our customer. So this is a nice reminder here. We can give ourselves kind of another reminder to help us to populate the actual sales receipt or invoice by using this billable option. So we're paying for the actual guitar here. If we make this billable, then it'll help us to give a pop-up as a reminder on the sales receipt or invoice. Now, it's not perfect because it's going to pull over the cost, and what we really need to do is pull over the actual amount on the sales receipt or invoice. So we have to kind of re-input it and make sure that we pick over the retail price and not the cost. But it will give us a kind of a reminder to do that as we populate the invoice, and that'll help us to know the type of guitar that it's going to be tying out to. So we will do that in future presentations. You'll note the little link here that's going to be an indication that we have the tying out of the purchase order and the expense form here to help us to populate this expense form. So what's going to happen when we record this? Well, obviously the checking account is going to be going down, so we're going to be decreasing the checking account. The inventory account is going to go up on the balance sheet, and we're going to also have the detailed inventory report of another Epiphone Les Paul that's going to be included in our inventory list at a cost of $400. So let's go ahead and say save and close and check that out. So we're going to say save and close, and then let's go to our balance sheet. We're going to go to the balance sheet on the right. Go ahead and refresh that report. Then I'm going to close the hamburger. I'm going to make this a little bit larger. So we're going to bring it up just a bit to that 125. And then we're going to scroll down and go into our checking account. So the checking account should now be decreasing by that expense. So we have this expense on 125 down here for the $400. If we select that, then we will see the other side, or we'll see the bill of it. And that being the expense form. Sorry, the expense form, not the bill. It's an expense form. Then we're going to close this back up. Then we're going to scroll back up top and take a look at the other side. The other side be going to inventory. Inventory then increasing. So we have the inventory asset. Selecting the inventory asset. We then have our expense down below, increasing the inventory asset once again by that $400. If we go back to our prior screen, we could also take a look at the detail for the inventory asset that we should have in a detailed report. Going back to the first tab up top, scrolling down to our reports. I'm going to make this a little bit smaller so we could see things. And then I'm going to type into our search field. We want an inventory report here. So I'll type in inventory, and we want an inventory. I'm going to take a look at the inventory summary report and open that up. We're going to change the dates up top to just change it to 12/31/20 tab, run that report. And now we have another Epiphone Les Paul. So we have an Epiphone Les Paul. We have two of those items in the Epiphone Les Paul. If we want to see more detail on it, we could select something on that line item. And here are the two items. We have the start of the 400 and then the number 2, which we purchased through that expense item. Going back up top, back to our report summary. If we go back to our report summary, then scroll down, we're at the $2,344 total. That should tie out to the amount that's on the balance sheet. Then if we go back to the balance sheet and we take a look at the inventory, we're at the $2,344 as well.